They dutifully handing over half your money so no Somali leering center goes without. They are now coming for the other half of your money. That oceanfront condo in Florida is starting to look mighty good. At least 10 states are now exploring an exit for wealth tax to squeeze the last drop from fleeing residents. That includes California and New York, of course, along with Michigan.
Order filled. All righty. Good morning, everybody. Happy Friday. Today is April 24th, 2026. Welcome to our live stream. Glad everybody's here. Um, just coming across the news headlines and bring up financial juice here. Something that's really stands out. Putin may travel to Miami. Russian will be represented at the G20 summit. Hmm. So it looks like Russia's coming back into the fold. That's really a positive thing for world economics, as China is already involved in that with the G20 and US, of course. But Russia's been, they got kicked out of the G7, the G20. This is big. Looks like there's going to be some talks over the weekend. Iran and Pakistan uh, try to work some things out. But one of the key things to watch for in the headlines is has Vice President Vance and Witkoff, I think it's Witkoff, yeah, have they departed for Pakistan? And that's kind of been a lead indicator that things will start to move forward. Right now, they're not going to send the president or the vice president over there unless things are going to be pretty positive. Okay. Another thing that has really in the pre-market as I'm putting things together, it looks like there's going to be a blow-off top, and that usually means that a pretty big short squeeze, uh, big run to the upside. We'll see if it's going to hold because we know how short squeezes play out. They tend to have a very erratic, big move in price to the upside, but they don't hold. They leave that long tail. Okay. So be extra cautious for that. It'll probably be news driven. We don't have a lot of economic reports today. Main economic report is consumer sentiment, Baker Hughes rig count. So things are going to be generated around news. Now, much of the social media is focused on a massive correction. Too many. Okay. Now I become really suspect when everybody gets one-sided. I kind of go, "Well, why is everybody running? Is there a fire or is just a little smoke?" Okay. But so many the social media, even the TV shows, CNBC, CNN, Bloomberg, and things like that, they're all preparing for a big, big correction. Now they may be right. Okay. They very well could be right, but I think their timing is off. Okay. Going into the weekend, possible talks, Iran and, with Iran and Pakistan and possibly the US to get things solved. Okay. And there was also some articles about, you know, whoever's doing the peace talks, okay, they don't even know who their leadership is in Iran anymore. Okay. You still have some of the generals from the ICRG, okay, which are out there. If there's going to be a regime change, there's basically two different leadership that they're working with. And the media is not helping out a lot with this. And one side is using the media um, to further their agenda. Okay. So pay close attention to what our leadership says, and we have to put a little more faith in what our leadership is telling us. Okay, so we'll see. It's a tough market because things are so news driven. Yesterday, though, we did see some of the banks, and actually the last 2 days, we have seen some of the banks and institutions start to come back into the marketplace. Okay, so things are starting to change. Um, in the overnight session and late Friday, we did see that the indexes and crude oil were moving together. Okay. Now these all start with smaller time frames. I spent a little bit more time on the smaller time frames to start to see these turns. Now, since the war in Iran started, crude oil and equity indexes have been inverse related, and last night I started noticing on the smaller time frames that they were correlated. Okay, so those are some signals that I look for that things are about to change. Now, I made mention of the blow off top. Okay, this could be a significant price move. Usually it's going to be news driven uh, for that price move to the upside. Um, uh, but we may be a little bit early. Now, watching the trend, dollar sign TRIN, I have that at the bottom. Um, we need to be paying a little more attention to what the trend is doing. Okay, now trend is not somebody's opinion. Okay, it's basically a math calculation of how things are put together. Okay, so it's upticks over downticks, up volume over down volume. And basically says if the trend is low and the markets are ascending, okay, there's implied that there is selling into the up move. Now, if it's a short squeeze, okay, we would see the trend would be high and markets are ascending. Okay. So in the pre-market, the trend, let's just bring that up. In the pre-market, the trend is low, down around 0.4. Anytime it's below 60, we want to take note of that. We're also looking at the QMI. We're seeing a pretty strong gap to the upside on the QMI. The NASDAQ pre-market indicator has a 92% correlation as the trader's sentiment at the open. Now, the indicator itself doesn't tell you whether there's buying or selling. It just implies that there's more upticks than downticks on the NASDAQ 100. Okay. So the upticks over the downticks also could imply that there is a bit of a squeeze about to happen. The other things that are notable is that we're seeing the US dollar had a pretty good move down, the hourly chart. We've been basing here. And then as we start looking at the 10-year and the 2-year yield prices, the indexes and the yields are pretty much doing the same thing, getting the same picture. Okay. So equity indexes such as excuse me, the S&P, S&P, NASDAQ, I believe. Yep, NASDAQ, Dow. No, not the Dow. I did that one. So the Russell and the Dow are still inside days while the S&P and the NASDAQ are outside. Okay. S&P and the NASDAQ, we will later on, after the session opens, we will be utilizing the open range breakout, 15-minute open range breakout. We'll utilize that trading strategy. Yesterday in our community trading session, we had a really good example of that and how we played that. Okay. We took some additional notes, especially when we had that first 15-minute candle, whether it was in the upper 25% of the Globex range or the lower 25% of the Globex range, and determining whether we're going to take a open range breakout to the upside or to the downside. The additional lines to the upside and the downside are 25%. First line is 25% of the Globex range, and the next one is 50%. And right now we're taking measurements. How many times do we get to 25 versus the 50? And then we'll start looking at some bigger moves. Okay. So we also noted yesterday that it took longer. The Nasdaq was an inside day, and it took much longer for that trade open range breakout to play out. Okay. Now that correlates a little bit with some of the information that we have collected over the years as far as inside days, outside days, and waiting a little bit longer for the entry on an inside day versus an outside. Now, since NASDAQ and S&P are both outside days, we'll expect the open range breakout trade to be shorter lived and probably a little more volatile in the price movement. Okay. So make sure you set your targets right, position size that fits your trading account, and don't overdo it. Okay. We're still in the study mode of putting these things together. And in the first week we've been doing this, it's proven that that open range breakout trade does work probably about 9 out of 10 times, getting to the 25% to 50%. We could see that it would take about 85 to 80 to 85% of the time it gets that, and then about 75% of the time we'll get up to the next levels. Okay, three quarters and 100%. We're still measuring and documenting this so that we can have some very high probability trade opportunities, but we want to see, how often it works. And then again, what conditions make it work. Okay. If we are opening up in the middle range, so let's just call it the middle, I don't know. I divided it yesterday into quarters. I may take the time to study that if we're not in the upper quarter or the lower quarter, then the open range breakout trade may be off the table for me. I still want to study it. I'm looking for some greater details to say, yeah, the open range breakout when it's in the upper quarter or the lower quarter has a very high probability of success versus if it's in the middle or a half. So let's see, the between three quarters and 25% of it. If it's in the middle, for the most part, is it better just to sit out of that open range breakout and look for a different strategy? Okay. Now, in documenting all of this, the strategy itself, open range breakout, is a pretty simple concept. Okay. But choosing the highest probability outcome or the outcome you desire, okay, requires that we get a little more detail of some of the information as far as conditions of the market, inside day versus outside day, whether the candle competes in the upper 25%, lower 25%, and so on. Okay. Those are things we're still building on. Okay. All right. So as we come back out, let's start with the S&P and we'll start going through. We got about 15 minutes before market open. At the start here, okay, we have 11 down stocks up over 94 cents, and we have four that are positive and 11 that are negative. Okay. That leaves us with seven negative. Seven negative times two would be 14 negative. Cash equals 14 negative. S&P futures are trading positive 23. S&P futures are overbought relative to the cash market. Now, being overbought, market can certainly become more overbought, but being overbought makes us a little bit more, being overbought S&P futures versus cash makes us play a little more defensive. Okay. Being overbought going into supply would be a whole different scenario. Okay. Oversold going into demand and so on. Okay. So the information I'm sharing with you is not to make a trade right now. It is to help you identify that, hey, S&P futures are overbought relative to cash. Now, why is that important? Well, S&P futures follow cash markets. They don't lead the cash market. Okay. Cash market is mainly quiet. You can see that the volume on the Dow 30 stocks is very light, a little bit heavier than what it has been. Okay, but still fairly light. When the market opens up fully, okay, the cash market and the futures like to balance out. So understanding that futures are overbought relative to the cash or stock market, and the calculation I did is based on the Dow Jones Industrial Average, Dow 30. The Dow 30 is the only price weighted index. Okay, S&P, NASDAQ, and Russell are market capitalization weighted indexes. This is why we can do that calculation to get a overbought, oversold fairly quickly. Okay. If you want to know more about that, just reference our website, and there's some videos out there that in classes that you can make reference to. Our pre-market routine, we do explain that in much detail. So as we watch the volume in the pre-market, as we count the number of Dow stocks that are positive over negative, we net the result to give us a cash value. At the market open, we expect futures to balance out with cash. So if right now, if futures are to balance out with cash, we would have to see almost a 35-point correction on the S&P. Okay. Now I do want to point out a couple of things here on the S&P over the last couple of days. Look at these. Huge drops. These huge drops each time are exposing where the big buyers are at. Okay. You might note as a percentage of the drop. I mean, right now you have to use whatever candle you're going to use, try to get that measurement. But notice each time that those drops occurred, the price had recovered. And there's some smaller ones inside there, but I'm just kind of mainly looking at the big ones. Okay. Now, when you start seeing the drops, that's kind of low liquidity, low on buyers, and price has to drop down to where the willing buyers are waiting. Okay. The only reason price went back up here is there's a large stack of buy orders around this range, and we also want to notice are the buy orders getting more aggressive or are they getting more bearish? Okay. So, and having to go deeper and deeper to get the buyers. So a lot that we can read on these charts, but over the last couple of days, we've seen that these have been some pretty erratic drops. So if you're trading in the overnight session, look for the spikes to the upside, look to the spikes to the downside, then look over on the left-hand side of the chart. Look for the leg base, or look for a demand zone. That picture over on the left-hand side will help you identify it. You may have to go down like to 1 minute, 2 minute, 3 minute type charts to get the exact picture, but be willing to do the work. Check it out. Okay. Moving over to let's see, the small time frame. We just had S&P come back down to the fair value gap. Okay, we got a nice little spike to the upside. The other thing that I wanted to point out was this range right here was a result of, if you adjust the time frame, it was a result of the reverse leg base within a gap. Okay. And we do talk a lot about the leg base group of candles, but why did price stop in the middle of the gap? You adjust the time frame, you can find the leg base group of candles inside of that, and that's where we got a nice little move in the overnight session. Low risk as well. All right. A lot of things that we can point out. Our course material does talk about the reverse leg base, and of course, we will be coming up with some more content about how to splice into trends by using the fair value gap trade entry. Target 71, 78 area. We have an opposing fair value gap. We saw the price was rejected off the top, so we'll watch for that near the Globex high. On the NASDAQ made a new all-time high this morning, along with the Qs. Just double checking. Yeah, the Qs have gapped up, making another all-time high, and we expect the S&P to follow. Russell and the diamonds are still have a ways to go. Okay. So in Q, prices come back into fair value gap. We'll be watching that for an open range breakout, potentially once that first 15-minute candle forms. We may be in the upper 25%, so we'll be looking for that open range breakout to the upside. As far as the Dow, why is the Dow not participating? Okay, let's move that out of the way. Dow is an inside day. So if you're going to take the open range breakout trade on the Dow, you have to expect that it's going to take a little bit longer. Give yourself much wiggle room as you possibly can. Okay. Better trades on the Dow for the open range breakout, as long as we're an inside day, will be towards 10:30, 11 a.m. Eastern. Okay. Right now on the Dow and the Russell, we'd be looking for a leg base type entry. No breakout trades. And no trending trades. Trending trades would be reference to a fair value gap type trade entry. Russell, inside day. Stay away from breakout trades. Look for zone entries. No kind of a little bit of uncertainty going on here. Internals, pretty much the trend is quiet. When we checked the pre-market trend, it was low. VIX trading at negative 0.39. It's pretty much unchanged. And we have to wait for the market open to see the tick Q, the tick, and advancing issues over declining issues and how they are played out. Now, crude oil got a pretty big drop based off of that news. And we might be seeing crude oil try to get back down to that 88 to 80 range. We did have a 60-minute chart, 65-minute chart where price came back up into the fair value gap. And if it starts breaking the low of 94.60, 94.70, we may see a continuation of that fair value gap working. On a 5-minute chart, we've got quite a few ups and downs, a couple of fair value gaps. Make sure you're trading the June contract for crude oil, and you should be on the June contract for natural gas. Natural gas last trade date will be on Tuesday next week. And often price will drop before last trade date and then look for kind of a rally on the day of or the day after the last trade date. We see this every month. Natural gas and crude oil, their futures contracts roll from the front month to the back month each month. Okay. And there are some common price patterns that we see around contract rollover and last trade date. They're pretty consistent. So when you go back and start doing the research, finding the last trade date and contract rollover for crude oil and natural gas, you start to see that bigger players are maneuvering around those times to uh, either prepare to take for delivery or rolling out to the next contract month. Often spreads are put in place so that they can lock in a price and tie up very little margin on that. Okay, gold. Gold's being pretty finicky today. Thought I had a good move on it and it was going in my direction, but give it a little too much wiggle room, so gold has just been consolidating. We're down a little bit on gold at the moment. We've got a nice about 1/3 retracement of the last move up. So sometimes there can be a little bit of buying at the 38.6, 38.2% retracement. Okay, so I was kind of looking for a bullish move, uh, small retracement to continue with the trend. And we'll see if that's going to happen. Okay, right now things are a little jumpy. I do have a pretty wide stop on this as far as using the fair value gap. Stop loss right now is at the low of candle one. Price did tap into the um, fair value gap entry. And so far it's holding, but it doesn't look that great on the chart. Okay. Again, on the equity indexes, ETFs, this is a very strong consolidation. I would anticipate a break above resistance, since this will be about the fourth time prices come up and tested that resistance area. A break above that would be pretty bullish. Okay, so we're talking about the melt up or the blow off top. Okay, it'd probably be more seen on the Qs. The SPY, once price starts getting above the all-time high, let's keep a close eye on that. Okay, you'd have to utilize, let's just do it. I think we got a couple minutes here. So utilizing Fibonacci price extensions, for me, they're very reliable when we're making all-time new highs. Okay. And we're going to look for a confluence of 3 levels. So I'm going to use this swing up. I'm also, we need to use the swing down because prices come back up. So I utilize 3 swings in price. And I'm looking for where price overlaps or we get a strong confluence. And for this, I'm using a swing down, a swing up, and another swing down, and then forecasting to the upside. So we have 3 overlapping areas, and I'll put some price levels on this so we can monitor it. And start off identifying where the confluence where we have 3 levels. Okay. And then just kind of as a secondary look for where we have 2. Take those off. So if we start getting that blow off top, first level, we'll start to look for 713 on the SPY, 715 for more of extreme move for the day session. Okay. Those are areas where we'll start to plan to be much more defensive if we get the breakout to the upside. These are not meant to be taken a trade short. Okay, at those levels, they're just making you defensive once price reaches those levels. As we look at the picks for what we have posted out there, FX markets are pretty lively. Looks like we have heating oil. We'll look for price move back up. We still have fair value gap. FX markets are pulling back. It means the dollar's moving higher. And we're looking at platinum and copper right now, looking to push more to the upside. I also want you to keep a close eye on the Bitcoin, crypto markets. We're starting to get a lot of chatter about the crypto markets, deadlines approaching where quantitative financial system needs to be in place. Okay, so there is a very big void. Once price breaks above that 80,000, 79,800, there's a very big open area where price may move pretty quickly. Okay. All right. So let's see how this, we just opened, so we got about 15 minutes. We'll see how that first open 15-minute candle plays out. Kind of a heads up, Nvidia's moving up, Apple's moving down. High type base on the daily chart on the S&P. To me, that implies that the market will continue to move up. And until we get that break above the S&P daily all-time new high, okay, sometimes it takes a few days, maybe a week or two for that consolidation right at the top. But as long as it's a high tight base, no more than a 23.6% retracement, the implied is it's going to continue. Okay. Okay, so now at the moment we have 16 down stocks, 17 down stocks. Yeah, 17 negative over 94 cents and 1, 2, 3, 4, 5, 6, so 11 times 2, cash equals negative 22. So we're about 32 points overbought S&P futures relative to cash. Now, being overbought does not mean short, okay? We have no way to enter the trade. It's just information. Overbought versus oversold does not make a trade. Okay. Things are settling out. Volume is coming in. We'll see how the indexes want to, or the banks and institutions, we'll see how they want to play things out. Okay. So looks like we're just kind of scratching around, trying to find out where the big players are at. So Euro, something to watch. We do have a leg base on the Aussie dollar. Possible some buyers in this area. Yeah, it looks like platinum's already tested the fair value gap, so that one's off the table. Got two of these up here. Oopsie. And NASDAQ looks bullish, and Russell and Dow are bearish. That certainly messes things up a little bit, doesn't it? So when the equity indexes are all scrambling different directions, that makes the trading environment a little more tough. Now we do know that the Russell and the Dow were inside days. Okay. While the S&P and the NASDAQ outside days. Let's come over to Russell, see where we have some buyers. Coming back into a buy territory. Inside days, very often the gap fills the same trading day. Look at the leg base on this 20-minute chart. Leg candle leaving is bigger than the leg candle in the zone, so we look for price to come a little deeper into that. So it's dropped down to the small time frame. And what I'm going to look for is from low to high. And look for see it right around that 88.6% retracement. You use multiple techniques and multiple pieces of information. And let's see. Let's find that leg base. 6 minute. There it is. And let's put a line where we have the, look at that, 88.6% retracement and the gap fill. So on an inside day, very often the gap fills the same trading day. So for the Russell, we'll look right around that 2778 area for a long. Now, on inside days, we want a zone entry, no breakout trades. Dow. Dow's already filled the gap, inside day. No breakout trades. Still building that first 15-minute candle. So as you can tell, we're using several different strategies, okay? Right now, I'm not affiliated with any of the prop firms. If you reach out to the team, we might have something that you can to do. Thank you, Harvey, for posting that. Yeah, the last prop firm that I was affiliated with, there were some shenanigans going on with trades that we never took, and we just kind of there was some mistrust that came into play with that prop firm because the trades we never took, we were all asleep or gone, and it was always right when we were um, about ready to be getting payouts and things like that, there would be kind of an erroneous trade. So it was like, wait a minute, something's not right with that prop firm. So once we started challenging that, we just kind of lost trust in it. So always be watching for those type of things. You know, I mean, we sometimes when you're using a prop firm, you're making a lot of trades, but check the time of the transaction and make sure you're documenting everything. All right, man, everything quieted down. Gold's starting to get a move. Had to give it such a huge stop and really like to see us go positive on gold. What's the Jones Act? It says over here, Russia has ideas to break the tie. Oh, that's good. Trump extended Jones Act shipping waiver through August. Hmm. Yeah, kind of interesting, some of the other news headlines where they're trying to direct focus away from Congress and senators. Okay, U.S. soldier arrested in poly market bets. Okay, betting on the Maduro capture. Okay, now they can't really prosecute. I mean, they can make an example of that. They shouldn't trade based off of that, but you know, there was no inside information leaked. It was just one person's assumption, you know. I don't know. A lot of things, make an example of the smaller guy, but not make an example of the Congress and senators that have been doing this all along. I guess his percentages were too high. Yeah, it looks like we're doing pretty good there. Let's see. We are just about ready for that open range breakout trade. And I'm going to take the Globex low to the Globex high. And it doesn't look like we're in the upper 25%. So if we're in the upper 25% in the next 2 minutes, then I'll look for an open range breakout to the upside. Or if we're in the lower 25%. If we're in that middle, I'm going to wait just a little bit longer because we haven't really studied that yet. So it's taking me just computer slowing up a little bit. So I'm gonna focus more on I mean, we're closer to the upper 25%. Let's just keep our size small. I'm gonna focus on the move up and then look for 50% of that move. So I'm setting up in Q 27,257. And our target, remember, we're outside days, so we want to put that target on there because it could be a fast move. 298. It was an inside day. Uh, it may take a little longer. S&P looking for the same thing, move to the upside. 7167. 7175. Okay, so both of those are set up. So to see crude oil, or sorry, gold is making a pretty good move and possibly creating another fair value gap trade entry. But we still have about 5 minutes for the third candle to complete. And we'll be able to adjust our stop loss up to this new one, the low of candle one. All right, let's get back to the Dow. We're looking for a zone entry, smaller time frame. I don't think we ever got that one. We are right in that fair value gap area, 5 minute. Let's go to Russell. Placing an order out there, 2778. Let's go 30. Stop loss, 2774. When you size your positions, make sure it fits within your trading plan. Everybody's trading plan should have a maximum risk per trade as they put things together, the trade plan together. And with the fair value gap, looks like we're breaking a little bit of resistance just by a tick. You have to be prepared that the entry for this fair value gap, we still got about 3 minutes for that candle to complete, will be around 47.22 for a potential long entry if price comes back down. Really like to see it clear these levels over here. And here comes NASDAQ coming around the far outside, S&P getting a little boost. No go, no go. Date for second round of U.S.-Iran negotiations has not been determined, citing a Pakistan source. That's causing a little bit of volatility. But we do have an open range breakout here. Yeah, we just started. So at this point, if you're going to add onto the trade on gold or use the open range breakout as a trade entry on gold, stop loss would be at candle lower candle 1, 74 or 47.05-ish. Tradable entry would be as price comes back to 47.22-ish, around in that area. Daily chart's pretty quiet. Oh, come on, Russell. You miss us by that much. Wow, that was a good entry. Oh, here we go. Come on, Forrest. Come on.
Order.
Okay, got the fill. Stop losses in place. Now, just because I got filled on the trade does not mean it's going to be a successful trade. We manage risk on this. But since I'm doing class, it would be really cool to see a good move up. Remember, we take zone entries only on inside days. Russell is still an inside day. We did get the gap fill, and there is a leg base zone at 776. When you examine the leg base, you can see the leg candle leaving, or both leg candles are bigger than the leg candle in the zone, and we did a proximal line entry, and we must be prepared for price to go a little deeper into the zone. And I'm going to hold off on that stop loss right there. Okay, and I'm going to look for the 88.6% retracement. I may add on at this point here. My computer's running a little slow, so I'm trying to quickly get everything lined up here. 774.
Order filled.
Yeah, place my stop loss at the Globex low. Come on, make us look good. Make us look good. I did not add on to the gold, but the fair value gap is working on that one as well. I'm going to look for once price clears that level, 47.33. I'll adjust my stop loss up 47.05. I'm just wanting a little more commitment that we're going to take out that high. Yeah, as far as our open range breakout trade, it worked on the downside for the NASDAQ, and I didn't take the downside one, but lesson learned. Team, did you get that downside breakout? Beautiful. If you got, I mean, it was quick. Notice it, they happen much faster on outside days. It was a really nice entry on Russell. Profit target, Russell, 2789. on, gold. Keep going, keep going. University of Michigan. Consumer sentiment. 49.8. Forecast was 48.5, so it came in a little bit better. Now, interesting fun facts about the University of Michigan Consumer Sentiment Report is it used to be for $4,690 a year if you donated to the University of Michigan, you could get that report 2 weeks before it gets released to the public. Interesting, huh? Nice little donation to the University of Michigan, get you that consumer sentiment report. Consumer sentiment report and a lot of our economic reports are based off of surveys. You know, those phone calls you get, would you like to participate in a survey? Now, they do have some select individuals that they do like as far as keep calling back, getting information off of that. But most economic reports are based on a survey. And it's really kind of fascinating when you get into the understanding of all of that. Gold's getting a little jumpy. What's crude oil doing? I guess. That gas 60-minute chart has come back into a fair value gap area. Market's unusually quiet. Now, typically on inside days, and the Russell's still an inside day, okay, is to take the profits a little more quickly than what I did here. I was hoping we'd get a bigger move back up, okay? But generally on an inside day, you want to take profits a little more quickly and look for the 1-to-1, 2-to-1 type bounces based on those conditions. Come on, gold. Take out that last high. Gold is getting jumpy though. Something going on. Another news headline just came out about Iran's foreign minister will discuss the side of a proposal for talks to U.S. which can be conveyed to the U.S. So potentially some pretty good drama for a Sunday night session open. We'll see how talks and things either go positive or don't. Whoo, there we go. Gold, gold, gold. Looking for that first target, 47.45. So this may be just a brief pause on that. Really thin volume. And the spread's getting pretty big. There's nothing in the way. Higher time frame resistance, 47.71. All orders have been filled in this range, so price should go through it. Let's adjust our stop loss up. Russell's still working. Indexes are quiet though. Going pretty deep in there.
Order filled.
we've created a new fair value gap. So the next opportunity to splice into this trend on the gold would be utilizing the stop loss. So we just hit a fair value gap, a downside one, so we're seeing a little bit of pullback. The next entry into this move up on gold using a fair value gap type trade entry, 47.37. Okay, target looking for opposing zones would be about 4,800, 47.71. But this newest one, 47.37, stop loss will be right about 47.21. Current stop loss is 47.05. And if you feel that you want to take a profit, then absolutely take it. Okay. Don't get the FOMOs. As far as that trade over here, let's just adjust the stop loss up. Russell, are we still going in the same right direction? Yeah, doing good on the Russell. All right, what else do we have? The open range breakout to the upside. Here comes the NASDAQ. Oh, we just got triggered on the NASDAQ. Bitcoin is quiet. FX markets all respected the zone. So did platinum. Look at that platinum go. Fair value gap on the euro. Nice trade entry. It looked pretty ugly earlier, but and looks like the Aussie dollar as well got trade entry. Crude oil coming back down. And gold's going to the moon now. Woo! Yes. Now keep in mind, if you're gonna get that entry long, price has to come back down 47.37. Did you get that, Silk? Taking the ride on gold? Why didn't I take more micros on this? We just got 3 micros. All right, so once this candle completes, I'm gonna be a little more aggressive on my stop loss, moving up to 47.21. And it looks like gold just hit resistance. A little green on the screen for the NASDAQ target 27,301 or 98. I think I had it earlier. Yeah, we do have a limit order out there to take a profit, but my lines may have got adjusted there. 27,301. Russell getting a nice rebound. Looking at our first potential area for profit target, 2789. Got to clear that. Yeah, indexes are struggling, so I'm gonna place an order out there to take a profit with that 27,889. Tell you, watching these open range breakout trades, they do give you some heartburn with the volatility. But you got to watch it, witness it. If you choose to play it, make sure the risk does not exceed your trade plan. But eventually, hopefully, we have enough statistics that we can set this trade up and forget about it. Okay. Now that's going to take some time, and you're going to have to watch how these P&L move to see if you have the stomach for this type of a trade. Now it's a pretty easy trade. The concept is pretty easy. It's an open range breakout using the first 15-minute candle after session open, looking for a breakout to the upside or a breakout to the downside. And then you got to start to establish a little more of your rules, whether you're going to take the upside or the downside. And then, of course, where you're potentially going to take a profit. It's not like hold on and let it run type. This is just a kind of bread and butter type trade. So yesterday in the community trading room, we sat through some pretty crazy moves. We got Russell. Russell's almost to our profit target. Have not created a new fair value gap, but price has not violated anything either. So I'm going to take a profit at this first. Notice on this move up, there was not on a 5-minute chart, there was no new fair value gap showing that the momentum is going to continue. So I'm being a little more defensive and willing to take a profit here shortly. Now, if this was going to continue, we would see some fair value gaps being created, but we're not seeing any in this move up, at least on a 5 minute. So that's causing me to be a little defensive. Yeah, it looks like Apple is come back on board. Let's take a look at the Nasdaq stocks. Look, the NQ stocks are large market cap weighted stocks. At least they're not selling off, but they are paused. As we're looking at the QQQs, we got a nice high tide base. Expecting the momentum to continue, and it looks like the Q's just retested. That fair value gap. Now we utilize the fair value gap type trade entry when the markets are trending. If they're reversals, we're looking for the leg base, and the fair value gap is nothing more than a trade entry. Place we can manage our risk as well. Come on, Russell. You can do it. All right. So how did you guys do today? What were you looking at? What were you thinking? How was your trading? A little bit later, in about an hour, we will do our mastering the charts recap and review. And maybe just do a little more trading, kind of work on some statistics and some details on that, what we're looking at here. So if you guys would like to join us in the mastering the charts recap and review, we'll take about an hour break and then we'll come back in the middle of the session, right about the time the London session is closing, and we'll see some volatility around that time. Got to get rid of this scratchy throat, though. All right, looking for a trade entry on gold, 47.37, 47.21 being the stop loss. I mean, we got a nice trend on this, okay? When you're in a trending mode like this and momentum is continuing in their direction, the pullbacks that come into a fair value gap area tend to be pretty reliable. But that also means that if you were in the trade earlier and a new fair value gap is created, you have to assess whether you're going to stay in it, okay? Because, you know, we had a pretty good stretch, this last little run up, okay? And the fair value gap trade entry, which we're approaching now, was kind of far away. When a new fair value gap gets created, okay, you have to estimate that, you know, price is going to have to come back down and test this area in order to keep going higher. So at that point, you're looking at your P&L and you're saying, oh, pretty good, it's good. But then your next trade entry is going to be much lower. Are you going to be able to handle the pullback? Don't let ego get in the way. If you feel good about a profit, take the profit. Okay? Because you know the next trade entry is going to be, if you're utilizing a fair value gap in a context of making higher lows, higher highs, or higher highs, higher lows, you have to get that pullback, just like we did here. Okay? And adjusting your stop loss to stay within the trend. Now, what we're really talking about here is the application and trade management utilizing the fair value gap. Because our first trade entry was down in a fair value gap. It was down in this range, okay? Getting into the trade, moving up, price came back down. There was a small fair value gap, little volatility around the open, around the open. Then price shot up, creating a fair value gap. We had to wait for price to retest, okay? And so on. Now, each time the price did test the fair value gap, there was an opportunity to utilize that low of candle 1 and adjust your stop loss and look for the trend to continue. Now, the nice thing about using fair value gaps is when one is taken out and another one is created, okay, you got to watch how that how that comes into play. And generally, it is more relevant with the steepness of the slope. This slope, this move, as far as the trend is a more gradual, so it may keep going. But once the steepness of the slope starts to exceed more than a 45-degree angle, okay, you want to anticipate that if there is a fair value gap on an upside fair value gap, and price takes out an upside fair value gap, and then just happens to create a downside fair value gap, okay, then the things are starting to turn, things are changing, okay, and you must become a little more defensive. Now, slopes and angles can be better understood once once you start to document many of these pictures on the price chart, okay? And when you start documenting more of these, they become more like the feeling. I think it's going to go, I think it's not going to go, okay? But how do you confirm that? It's by looking at a lot of past chart patterns, okay? Slopes and angles are a huge part of how traders feel about a trade. All right, still waiting on Russell. Okay, and you can see that there was notice the steepness of the slope here, move up. And the sharp move down, this is almost like a V-shaped reversal. And again, it's based off of the slopes and angles, the steepness of the drop, the rally back up, okay? Kind of alert us to different price patterns to start to document. Okay, still looking for a profit target 27.90, or if this profit is good for you right now, then just put it in your pocket. Okay. At any rate, we are done with this session. In about an hour, we will start the Mastering the Charts recap and review. And wish everybody a good weekend. Thanks for joining us again on the YouTube channel. And let everybody else know. You can always learn something here. All right, have a great day. Oh, come on. Hit it, hit it, hit it.